We're live here, first episode of Beyond Returns, something new project we tried to get together. Robinson, why don't you introduce yourself?
Sure. Hey guys, I'm Robinson Crawford. I run a small investment advisory firm out of Phoenix, Arizona. Been in the industry since 2012.
So the goal of this Beyond Returns channel is to talk about a variety of subjects, mostly about markets, business, financial planning, and just have some fun. I'm Gabe Kaplan, work and live in New York. Recently moved to the suburbs due to COVID. I mean, when the parks were closed and we have a little kid, it's kind of difficult to fit everybody in a very compressed area. So we decided to start looking for houses. And so I have a financial planning firm. I do also investment management, and it's been a ride. Let's start with a market review here. So we're recording this on the 11th of November. Obviously, we're recording this, and it's live. And it's been crazy the last days. Like I think since Monday, we had tremendous movements in the market. You wake up, you look at your portfolios, and you see like, wow, this is moving tremendously. The way I describe it is more like the momentum factor. All these like hyped up internet stocks have started to fall, I guess, to reverse to the mean. But you had the S&P 500 going up like a lot. The COVID affected stocks, reacted positively to that vaccine announcement that happened. And those that were work from home really took a beating.
Definitely. So I think very much in the same terms. Factor investing is like my first love in markets was efficient markets. When I realized that someone was like, okay, I'm going to take a humble approach to this and not think I'm smarter than everyone. I was like, oh, okay, that's great. And then I over time got exposed to people who are writing and talking about factor investing. That's your value investing on accounting metrics, or momentum investing based on price history. This week has been pretty bonkers. First time in a while. I feel like we get one of these every 3 or 4 months where we get a couple of days where value seems like it's going to work again.
Yeah,
we probably get a lot of people cheering, hooting and hollering, all excited that the value's back. But I've read Aaron Stanhope. He writes The Factor Investor. It's a daily market review that I really like. He said it's the playing out of the reflation trade, is as cleanly as he put it, right? Which is the reflation of value stocks and the fading of the momentum, the COVID stocks, as you called them.
And this is something I read yesterday. A lot of these companies is work from home companies. Companies itself that have implemented transformational systems. It takes time to implement those, and like expenditure will go through several quarters, if not years, before the transformation happens. So if they started talking about it during the beginning of COVID, and then they decided they're going to implement it during COVID, it's going to take a while for them to deploy that money. So I don't think that we're going to see the full effect of, at least in the business, in the enterprise area. On the consumer side, though, I'm totally with you. The moment that vaccine is out, and the moment I become immune, I'm taking a flight somewhere. I don't care where. Take me to the first place where I can travel. This itch.
Just head to the airport.
Yeah, heading to the airport, just buying whatever ticket is available on the way there. One of the issues I wanted to discuss was the long-term changes for behavioral changes due to COVID. And I think I've discovered one with my parents, which is ordering food.
Yeah, on that long-term behavioral question, there's a bunch. Food definitely comes to mind. We order groceries for sure. We order Uber Eats, DoorDash a lot too. Shamefully, we get lazy and do that quite a bit. You got to wonder how many people have signed up for services like those, and how many people who are just I would think digital adoption was on the edge. So you mentioned your parents. How many people were on the edge of using a service like that, but then we're pushed into this through COVID. So this digital transformation thing, I think, is still taking up. There's still room to add more people who are functionally using the economy of the internet.
What other behavioral changes do you think? I mean, in terms of office space, I mean, that's one other one that I talked to some senior partners at law firms, and they just don't want to go back to the office. They're like, I'd rather work from home and meet clients if I have to, but not at the office. We go for an outing or something.
Yeah, that's a great one. I want to say I read this in Grants recently that the CEO of Brookfield Asset Management, one of the biggest real estate owners in the world, said that for their marquee assets, so offices that are a headquarters owned by a great credit quality tenant, so an American Express regional headquarters or something.
Yeah.
Those assets are actually, you would think that because no one's going into those, that they're liable to not pay their rent, or they're going to try to get out of these leases. His thesis is that these assets are actually worth more now because the foot traffic has gone down, the maintenance and depreciation is functionally going down. Like they're not getting beaten up like they're used to because there's no people in them. But with good credit quality, those leases are still getting paid, right? Which I thought was a really interesting. I'd never heard anyone say, "Oh, this is good for offices in some way."
Yeah. And the final thing that I thought was housing is an issue right now. Everybody, when they're looking for houses now, they're looking for office space within the house. So, you used to think about like, I need maybe 3 rooms, one for myself, one for the first kid, maybe, the second one. And I do need an office space. So like either the basement or somewhere to accommodate like a home office. And that just means more square footage for a house, and then it's going to cost me more to buy a house.
Yes, it will. Do you think that, and have you found with like in your practice or with your clients or anything, that the demand for housing far outpaces the supply of stuff that's in a reasonable price range or in good locations?
I found that at least the clients who are in the New York metro area, that the inventory is very low right now in the suburbs. I'm sure it depends where you go. I recently saw a very interesting interview about someone talking about the generational changes, and there seems to be a demographic growth in the area between 30 and I don't know, 40 years old. People who are going to lever up, who are going to spend more, who are going to buy houses. It's the millennials. The millennial generation is a bigger generation than I think the baby boomers itself. So you have those baby boomers who are like exiting from the housing inventory in the suburbs, and you have millennials coming in at a greater number than what's people being like leaving the suburbs. And that hasn't happened in like decades, right? And so you're going to have a natural increase in price because of that. And so that's an interesting fact. And some people say like that there's like definitely a positive tailwind for GDP growth in the next couple of decades. I think that the second big topic is taxes. And I think you mentioned, I looked at this up after you sent it over about IRS shenanigans. It was, I forget who it was, but the article that you sent over talked about this person who donated money to pay off the debt of entire school, and he's had to come forward and I guess negotiate with the IRS a settlement.
This is an extremely wealthy guy named Robert Smith of Vista Equity Partners. He's very famous in the private equity world for being successful, which good for him, right? This guy went through an incredible number of hoops to avoid taxes through shelters of dozens of entities, trusts, foreign bank accounts, to not declare his income in the U.S. And then eventually came to an agreement with the IRS about it. What struck me about it is he's making, I don't know, dozens of millions of dollars a year, right, in actual declared income while he's in the U.S. But still, of course, paying the tax bill on all that. If he's a California resident, he's knocking on 50%, right? If he's really making huge incomes. But his choice was to go and take a tremendous risk that he knew he was taking and sign up with a with an attorney to do things that he's probably sophisticated enough to know were not legal, right? Which is just a whole nother layer of risk that from the outside, reading this in retrospect, of course, just doesn't make sense. It's strange to me. But again, I've never paid a $5 or $10 million tax bill in a year, so I don't really know how that feels.
Yeah. The one thing, I'm in the process of buying a house or looking for houses, and I keep an eye on the mortgage rates. They have started to increase, and it's kind of it's a little bit scary to see that, just because we're looking at the largest purchase of our lifetime, and we're probably going to finance it, and seeing the mortgage rates. Well, the first thing I started seeing was the 10-year rate going from 50 something basis points to now 83, 82 basis points. It's a huge jump. And I actually do think that some of the market jitters are as a result of quickly rising interest rate. Probably do well or better because of a rising interest rate environment, especially on the long end, are the banks, right? Because they take deposits on the short end, they pay very little on the short end, and they lend out on the long end, and they take the difference. So we're hoping to see banks recover a little bit, because the last couple of quarters have been pretty tough on that industry. I think it's one of the worst performing industries across COVID. When I was looking for mortgages, they were starting to quote me 3.25, 3.25% for a 30-year fixed. And they always have those promotions where you say, if you open an account with us and move money with us, then we'll lower it by an eighth, depending on these breakpoints. Right. It's tough to imagine, you keep that mortgage for 30 years, and then think about what you would be paying in 25 years for a mortgage. Inflation adjusts, but that mortgage, the payment remains the same. So on the real amount, you're paying much less, right? If you're adjusting for inflation. So anyway, you actually listed one of the last items was The Last Dance from Michael Jordan, I guess. I saw some trailers, this caught my interest. I'm not. So you're talking to when you're talking sports, you're talking to the wrong person here. Sure. As an immigrant to this country, basketball is a global sport. I get it. I'm not tall, so I mean, obviously, I could not play this.
Fair.
But basketball, it's one of my favorite sports to actually go and see in live. So it was interesting to see the trailer of this. But tell us a little bit of what you learned, what it is about, and then what you learn, and I don't know what the takeaways are.
It's a 9 or 10 part documentary series about the basketball career of Michael Jordan, and it's exquisitely done. The quality of watching it is just can't be beat. They did an amazing job. The piece I would recommend to anyone to watch it, all 10, you watch them in a day, I don't care. The takeaway that I wanted to talk about for this one is that Michael Jordan is famously insanely competitive. In the documentary, they go through a lot of the head games that Michael plays with himself. So he is frequently taking a perceived slight against him by another player or a member of the media, or anything he could say that pumps him up to say that something is against him, or that he's the underdog, or needs to prove himself. When he can get in that headspace, he's unstoppable. He's deadly. Which is
basically creating a dynamic of competitiveness, I guess, in his head mentally.
Exactly.
And then that will allow him to prove the other person wrong.
Exactly. So there's no, in the course of the series, there's nothing as powerful as a Michael Jordan who feels slighted, right? Or feels underappreciated. And I thought about this as it applies to maybe the personal financial world, the importance of having, you could call them maybe micro goals. And there's of course ways to get creative and think about this as maybe a competitive thing. But I was thinking about micro goals and how to reframe them so that they're more tangible and more related to, I don't know, our competitive brain that says, go get this done, so that they're more interesting than the boring spreadsheet goals. Don't do it for most people. And I understand why. If you use dividends, which I don't personally advise people to buy stocks based on dividends necessarily, but dividends are a nice one where you could find a stock or a fund that pays an easy to understand dividend yield. And if you can translate that back into something that has to do with your real life, right? If you buy X amount, if you buy $10,000 of this dividend stock, you can now get your, Christmas dinner paid for every year by the dividends, right? And then increase that until it pays for your car insurance, and then it pays for your rent or your mortgage, right?
It replaces your income or your spending. Yeah.
And you can make that more physical, more tangible, where it's a more competitive game than the one that everyone else is seeing, which is, transferring funds into a brokerage account and buying things, right? That's a little more boring. Everyone else is playing regular basketball, and Michael's out here playing.
Yeah, I mean, this is all we have. Just, for any viewers that see this afterwards, just to make sure that, what we're saying here is only informational. Nothing here is considered advice. So if you have any takeaways, always bring it up to your own tax advisor, investment advisor, financial planner, or attorney. We're not acting in that capacity. So just to have that in mind. I will, post in the description a disclaimer as usual. But that's all that we have for now.
Awesome. Thanks for having me, Gabe.
Thank you for being here. See you next week.
You got it. Peace.
Bye.